Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He also writes for the Financial Intelligence Report. He's speaking to us from the Bahamas. Welcome back to the show, David.
Hey, thanks for having me.
David, can you make any sense in what's happening in the major stock markets right now?
Well, I think we talked about this a bit in the last interview. It's probably the craziest market I've ever seen, in that when you have these kind of bubbles, usually like in the late 90s, what happened in tech, or 29 in stocks, or, even earlier this year before the whole COVID thing happened, when you have all these things happening, usually you have some kind of boom. That's why people are chasing stocks. That's why there is this, the irrational exuberance, or whatever you want to call it. That's why that's going on, because, things are good and people believe in it. The housing bubble in the United States was kind of like that too. And, this time though, what's happened is this is like a liquidity, driven rally, and and almost like people being locked in their houses during COVID has also almost like increased the rally in size, because these people are getting these inflated unemployment checks and government subsidies right now, and a lot of people are almost making more money than they were working, but they're also making that same amount of money sitting at home, not having as many expenses, because you can't go out to eat, you're not commuting to work, so they've got this kind of disposable income. And I think and a lot of them are millennials, and they're pushing up the prices of these stocks. And you've seen huge runs in kind of those FANG stocks. And, if you go look at like a 20-year chart of Microsoft, it's a completely crazy parabolic curve going on in that stock. And then, Tesla's kind of the poster boy for this right now, at $1,400 a share, at over $200 billion market cap, bigger market cap than Toyota, which is the largest, car producer in the world. So, it's just absolutely crazy to see this happening, but I really think it's the combination of liquidity, all the trillions of dollars they printed, and then on top of that, a lot of these new traders entering the market. And again, it's kind of funny because they're entering the market during an economic downturn. It's not like when they usually come in at the end of a boom.
Are these new traders in for a possible nasty shock if there's a correction?
Yeah, because I think what's going to happen in the economy is, personally, even if there is some kind of vaccine, I'm looking at a W or L-shaped recovery, because a lot of these job losses are going to be permanent. A lot of these businesses just can't survive. Like, I know some people that have little businesses here or down in the Bahamas that are based on tourism, because tourism is going to remain to be dead for the foreseeable future. A lot of them are going to have to do something else and close shop. And I think that also goes with any kind of service business, not in just even a tourism based economy. Like that's going to happen in a restaurant, or, like I said, any kind of service based business. I've seen the studies where some people think that half these restaurants could fail. And there was one of these famous celebrity chefs recently basically said that he thought there was only going to be chain restaurants almost left at the end of all this, So, it's, because they're the ones that can, kind of soak up the downturn, but, the smaller guys can't. So, I think that is going to be more the reason why. And and kind of like 2000, if you go look what happened in 2000, it was like Cisco, Oracle, all those big tech stocks that kind of drove everything higher, like a handful of them. And now it's like Microsoft, Amazon, Apple, etc. And it's very similar. When the market gets that thin and there's just a few stocks driving it, that's usually a sign you're near the end. Now, short to intermediate term, I just don't know. One thing I've been playing around with was thinking that, the NASDAQ would continue to kind of blow off here in the summer, and the S&P might make a double top, with its high, which would be about another 6-7% higher during the summer before we kind of roll over in the fall. So yeah, I definitely think they are in for a nasty surprise, and part of the reason is the next stimulus package or next round of money printing from the Fed, you're probably gonna have to see something bad happen in the markets for them to respond to that. So that's another factor too, because this is liquidity driven, and if you're not going to get another few trillion printed or spent until there's another downturn, that downturn needs to happen.
We'll have more with David Skarica right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with David Skarica. David, what's going on with gold?
With gold, I think the liquidity, this is the positive part of it if you're a gold bug or a gold bull like myself, is, they are printing all this money, and there are these huge deficits now. One reason we have this kind of normalcy in the economy, and I wouldn't call 2020 normal by any means, but relative normalcy, is because people are getting these inflated, unemployment checks, government bailouts, etc., to kind of, keep their lifestyle going. And of course, that's costing trillions of dollars. And I think that gold is kind of seeing that all these governments are spending way too much money, and this is not sustainable. And gold is obviously kind of a hedge against that as well. And then, of course, in the United States, you have a lot of political turmoil right now with, the protests and all that sort of thing too. And of course, gold is kind of, a hedge against that kind of turmoil. And when you have the global leader and the superpower of the world going through that kind of turmoil right now, I definitely think you get this flight to gold. And then what's also being seen in gold is, and this is the one thing a lot of the gold bugs argue would happen for years, so much of the gold market is paper. Like, people buying the GLD or people buying futures or the whatnot, that now you're actually seeing huge amounts of gold being asked to be delivered physically. And of course, when that happens, it means that there's less supply out there at a time when demand is increasing for physical, and that also pushes the price higher.
Is the same kind of thing happening with silver?
Yeah, silver, I'm actually kind of surprised. It has come off nicely. I mean, come off from its lows or come up from its lows. But I'm surprised it hasn't been a little stronger. Maybe it's still kind of the global economy slowing, silver being used a lot in industrial usages, like holding it back. But yeah, there's definitely that kind of tightness in the silver market. And at some point, and silver has outperformed gold since it bottomed in March. But at some point, I'm expecting silver to really outperform, because the gold to silver ratio is still roughly 100-to-1, which is still near an all-time high. So that needs to come back in line, probably more to 50-to-1. And that essentially means you could argue that gold could do nothing, or say gold just went to 2,000. And with that kind of ratio, silver could be $40. So you're talking silver could almost double without gold having to do anything, just to become in line with this historical kind of ratio.
Anything happening with uranium right now?
I'm not a huge uranium bull. I think long term, you definitely have some demand positives with China and India building a lot of nuclear reactors. But the problem with uranium is a lot of these things, like uranium or even the clean energies like solar and wind, they all compete with oil, right? And natural gas. And with oil, around 40, natural gas, I think sub 2, it's still very cheap to burn those fossil fuels. So that, as long as that oil market remains depressed, and I think it will for the next 6 to 12 months, that is really going to hold back natural gas, especially going to hold back uranium from really moving in a big way. I know it has to have a little bit of a balance, and some of the companies have done okay, but I'm going to be honest with you, or blunt with you, uranium doesn't really kind of interest me. Actually, what I'm looking for, if I were to do anything in energy, I'd be looking more at if there is a second leg lower when the global economy doesn't really, recover second half of this year or early next year, and say oil has one more leg down, kind of retest those lows that it had, a few months ago. I'm looking at a lot of oil and gas companies over uranium. And I do a lot in mining, so it's kind of like in mining, I'd rather be in gold and silver and maybe even some base metals over uranium as well.
We'll have more with David Skarica right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with David Skarica. David, what's your outlook for junior miners?
Well, right now, I'm really positive. Now, I'm totally biased because I do a lot in the junior mining, arena. I invest in the companies. I do private placements. I raise money. I do venture for the companies, venture capital for the companies. So, by the way, I do that for all companies too. I will do that for tech companies and et cetera. Like I did some, during the boom in marijuana, I did a few marijuana deals as well. But I'm really have always been kind of a gold and precious metal guy. So I think right now, and with that bias, take account with that. I think right now I'm really bullish. I see this is the best setup I've seen in the juniors probably since 02, 03 when they really went up for the next 5 years, and even after a decline in 08, really went up. Had a strong junior market into 2011. So this is probably the best setup I've seen. Remember, I talked about low oil and gas prices. Those are input costs for miners, right? Because the economy is weak. There's not going to be a lot of wage pressure on the mining side because miners aren't going to strike because they're going to be happy just to have jobs. So I really think you have this kind of input cost having deflationary pressures with the gold and silver prices increasing, and it's a really great scenario for them. And there's been so little exploration because the market was so bad in the junior miners from 2013 to 2019. I really think it's a setup. And also too, I talked about these retail traders earlier. Well, I think if you look at these kind of retail traders, they're the people that trade marijuana stocks, traded cryptocurrencies, now are chasing kind of these tech stocks on this rally. They're attracted to sectors that have volatility and high beta. Well, that's totally the junior mining sector. So I think that if there is a decline in the market, which I think will lead to a bid even higher in gold and precious metal prices, those kind of people are going to come in.
Dave, anything else you're really keeping a close eye on right now?
What I'm doing, we'll get back to the market, is I've strayed away from really, because I'm not just a junior mining guy or a mining guy at all. I am, I also trade and do options and short and that sort of thing. I am starting to edge back into short positions. One stock I'm short, the short's done well, is via some put options. Because again, with a lack of a turnaround in the economy, I think auto sales will continue to be weak. So, anyhow, so I bought some puts on that, and I'm slowly kind of edging in. Like I talked about Microsoft, I'm going to be looking at some puts in Microsoft because the stock has gone so parabolic. So that's really my thing now is, from now almost into mid-July to the end of the summer, I'm going to be looking at kind of adding to short positions here as kind of hedging my positions. Because one thing about gold and precious metal stocks and juniors, they are still equities. And as we saw in March, or we saw in 2008, or even during some of the sell-offs in like 2001, 2002, during that bear market, they too tend to sell off with the stock market when the selling gets ugly. So I do want to hedge myself with some short positions.
David, thank you so much for chatting with us.
Thanks for having me. It was great to be here.
My guest has been David Skarica, founder of the Addicted to Profits newsletter online at addictedtoprofits.net. He writes for the Financial Intelligence Report as well. If you have any questions for David or any of our other guests, you can send them to info@howestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.